Hello everybody, it is Michael here from My Retirement Trading, and today I'm going to share my early retirement plan and how I plan to get there. But before I get into this, I must state that none of this is financial advice or a recommendation, and it is for entertainment purposes only. So that being said, let's get into it. Well, I would love to retire early. Part of like the FIRE movement, financial independence, retire early. And I am 54 years old and I have saved quite a bit of money in my lifetime. But one of my problems that I have is that probably over 2/3 of what I have in my net worth is in an IRA, which you cannot touch to your 59 and a half without paying penalty, as far as I know. And so that is something that goes through my thought process when I want to retire early. But I do want to retire early because I want my freedom. I don't want the pressure of dealing with people on a regular basis. I want to do things on my terms. So I do want to retire early, and I'm 54. And right now in my cash account, I'm receiving over $69,000 worth of distributions projected. And that's a lot of money, and I could definitely live off of that. But there's some NAV erosion and different things like that tied to it. So, but anyway, I usually have had better luck with covered call ETFs that are index based. So basically, that is my plan to retire early. Is I'm going to use covered call ETFs to live off of and pay my bills eventually. Right now I'm still working, so I'm not retired, but that is my plan eventually, is to live out of my account using covered call ETFs, basically passive income investing. And I'm going to go through my thought process on this. But anyway, let's get into it. So I headed over to TappAlphaFunds.com, and I went over to their TSPY page, the TappAlpha SPY Growth and Daily Income ETF, and this one's based on the S&P 500. And the reason I started this video here on this part is it says distribution rate 14.35%. So my thinking is, say if I had $100,000 in here, and we'll just call it 14%. If that distribution rate was to keep up, that would be $14,000 a year worth of income per 100,000. So I wanted to share that with everybody on my thought process. And then if you head over to their TDAQ page, it's the TDAQ, TappAlpha Innovation 100 Growth and Daily Income ETF. And this one's basically based on the NASDAQ or the triple Qs, and they sell options against it. And it says their distribution rate is 17.51%. Well, we'll call it 17 and a half. So if you had $100,000 in there, you would get 17,500 a year worth of distributions if that was to maintain. So that's one thing I wanted to share. And then, so like if you had 100,000 in this one, it got 17,500, and 100,000 in TSPY, you would have $31,500 worth of distributions a year if those distribution rates were to keep up. And so, depending on how much money I need to live on, you can see how this stuff can quickly start adding up. So like if I had $400,000 and I had it 50% in each one of these, it would be about $63,000 a year worth of income. So, and that, I mean, that's minus taxes and things like that. But that on 400,000, if that was to maintain true, you could get $63,000 a year worth of income. So I wanted to share that. And then um, go over here to SPYI by NEOS, and it says your distribution rate is 12.16%. So we'll call that 12. And if you had $100,000 in there, you would get approximately, if the distribution rate stayed the same, you would get $12,000 a year in income. And then let's go to the QQQI. And it says it pays distribution rate of 14.31. So if that was to maintain, we'll just call it 14, $100,000 in that. It's 14,000 a year. And if you had 100,000 in the other one, the SPYI, that'd be 12,000 if everything maintained. So that's 26,000. And say if you had 400,000, so you'd have double the amount, you'd have 52,000. And I wanted to share that with everybody. But say like if you did 100,000 in each one, hypothetically, so we'll do the QQQI, say it's 14%, that would be 14,000 on 100,000. And 12,000 on the SPYI. Plus 12,000. That's 26,000. And if we went back over to the TappAlpha, to the TDAQ, say you had 100,000 in that, that would have been about 17,500 based on the last distribution. So you're at 43,000. And the TSPY was at 14.35. I just called it 14. That'd be another 14,000. So if you had 100,000 in each of those funds I just talked about, and the distribution rates were to stay the same, you could have $57,500 a year worth of income, and all your eggs wouldn't be in one basket. That's my kind of like thought process on this. But can I really live on $57,000 a year? Minus taxes. I'm not sure, but this is kind of like the reason I brought these pages up to show my thought process on this. But say if you had to pay 15% tax on that, say, you would still have 48,000 if everything paid the same, and divide that by 12 for 12 months, that would be about 4,000 a month. And I believe personally I could live off 1,000 a week or 4,000 a month. But those distributions may not always stay the same, but as what most recent. So I feel like maybe I should overdo it. Like maybe if I had 500,000 instead of 400,000. But I just thought I would share that with everybody. And then like, if you head over to stockanalysis.com and do a comparison of the SPYI versus QQQI versus TSPY versus TDAQ. TDAQ hasn't been out very long, so it's probably not going to give good data. But in a 1 year, like I said, you can't really count the TDAQ because it's only been out since September 4th. The QQQI has a 20.33% total return. And the SPYI has a 14.06% total return. And the TSPY has a 13.48% total return. And the TDAQ hasn't been out that long, but since it's been out, it looks like it has an 8.86% total return since September 4th, which that's only a few months. So I thought I would share that with everybody. And if we go over to Snowball Analytics, and temporarily I've made this my portfolio and my retail account public. So if anybody wants to take a look at my exact portfolio, I'll share that link in the description. And it's one of my favorite websites to do tracking of my portfolio on. And so if we go over here to my portfolio, and it shows that in this account I've got about $300,000, $321,000, and according to this, I'm going to receive about $69,800.51 worth of distributions, but there is some NAV erosion. So that means some of the share prices on some of these funds will go down. But I may change the portfolio where that doesn't happen as much. But I haven't really decided what I'm going to do. But my basic plan is to try to live off covered call ETFs in retirement until I am 62, and then I'll start drawing my Social Security. But I'm only 54 right now, so that's like 8 years. And I'm still working right now, but I'm not sure how much longer I will work, or if it'll be a short period of time or another year or two. I'm just not sure. It depends how bad I want my freedom. But I thought I would share that with everybody. And some of these are weekly payers and monthly payers. But if you want to see my portfolio, like I said, I'll share it. And they're actually having a Black Friday sale on this app, if anybody is interested in it. So I'll share that link in the description as well. But for example, it shows that the QQQI by NEOS, I have 17.1% in my portfolio. And like I said, this is index based. This one's based on the NASDAQ 100, and it's index based. And I got, you can just see my whole portfolio there. I think it'll be more self-explanatory. So I thought I would share that with everybody. And also, Stock Analysis is actually having a Black Friday sale. If anybody's interested in that, I use this to do all my comparisons and everything. So I thought I would share that. So like I said, all these are like index based, S&P 500 index based, NASDAQ index based, S&P 500 index based, and NASDAQ index based. So and I usually have done better personally when I use index based type of funds. So that would be one of my plans. And something else that I wanted to share, one of the single stock cover call ETFs that I've been using a lot lately is this NVII by RecShares. And it's been paying a pretty high distribution lately. And let's see, since it's been out, it's got a 40.47% total return. And this one pays weekly. And in the last month, it's been down quite a bit, negative 7.16%. But if you spread it out to a longer period of time, we're talking like an 40% total return. Let me see when it first came out. Looks like it came out around May 28th, 2025. So I do use some of these type. Um, I feel like they're riskier in my opinion, but they may not be. That's just, I feel like it's more concentrated because something can happen to the underlying NVIDIA and it might not turn out favorable. But let's see how it does against NVIDIA. And it shows right here, it actually has outperformed NVIDIA by, I guess, because of the payments. But it looks like it's NVIDIA in that period of time paid 30.63%, and the NVII by Rec shares paid 40.47%. So I thought I would share that with everybody. Well, I wanted to share some of my spreadsheets because this is part of my plan to retire early. And I've got a lot of different funds in here. And a lot of them are weekly pairs and a lot of them are monthly pairs. And like this QQQI by Curve, it's a monthly pair. And the QQQI by Neos, that's a monthly pair. SPYI by Neos is a monthly pair. The TDAQ by TappAlpha is a monthly pair. TSPY by TappAlpha is a monthly pair. And the GPIQ by Goldman Sachs, that's a monthly pair. And the QDevo by Amplify, that's another monthly pair. And then everything else is weekly on here, from the WPay by Roundhill, YMAX by YieldMax, YMAG by YieldMax, HOII by Rec Shares, PLTI by Rec Shares, NVII by Rec Shares, and TSII by Rec Shares, QLDY by Defiance ETFs. And so let's just take an example of something here. We'll go right here. And this nice payment that I received this past week by Neos QQQI, which is a monthly payer, I received $1,000, $1,004.85. And we're going to go over to my cost basis tracker. And in that particular account, my cost basis on that is $73,184.86. So if we were to multiply that payment by 12, because it's a monthly payer, and then divide it by my cost basis of $73,184.86, I'm actually receiving a 16.47% APR based on that last payment on my cost basis. So I thought I would share that with everybody. But basically, I got $1,000 a month coming off of it right now, off a $73,000 initial investment. So I thought I would share that, and let's do the same with a couple of them. We'll do the same with the ones that I talked about earlier. So go back into the cash account, and we'll take the SPYI, and I received 437.18, and we'll multiply that by 12 payments, and we'll go by my cost basis on that, and we'll divide the 36,604.73 into that, and I'm getting a 14.33% APR on my cost basis. And so that's part of my plan to retire early is to use funds like this. And let's do something like the TSPY. So the TSPY, this past payment, I received $303.09. And if that paid 12 times a year like that, that'd be $3,600. $37.08, and we'll divide that by my cost basis of $24,052.34. And you can see I'm getting a 15.12% APR on my cost basis based on the last payment, if that was to maintain. So I thought that was cool. And let's do one more or two more since we talked about them earlier. And that is the TDAQ. So the TDAQ, the last payment paid $299.31. And if we multiply that by 12, that would be $3,591.72. And we'll divide that by my cost basis of $20,368.80. And that's showing that I'm getting a 17.63% APR on my cost basis based on last payment, if that was annualized. So I thought that was very cool to share. And then I want to go over the one last batch of payments. This to show my thought process on how I think about things. We'll take this. We'll take the last four payments of this, or the last five payments of this NVII, and we'll get an average. So we got 62.97 plus 66.99 plus 72.85 plus 79.77 plus 141. That's a huge payment. And we'll divide that by 5. So that's my last 5 payments averaged $84 a week. And if you multiply that by 52, since it's a weekly payer, that's $4,400 a year. And let's see what my cost basis is. My cost, if you divide that by my cost basis of 6809.73, I'm getting a 64.69% APR based on that average of those last 5 payments. So that's, I thought that'd be very interesting to share with everybody on this. And my last month's payments were about $6,500, I believe, right around there. And one little thing I wanted to share as well before we get out of here on this particular page, I want to go to my IRA. And even though I'm not 59 yet, this maybe could be my emergency fund. And what I mean by that, like this past month, I received 2 distributions, and one was from QQQI by Neos, and one was from KQQQ by Curve, and it totaled $1078.19. So if I was to receive those payments every month, and that would be 12 months in a year, that would be about $12,938.28 worth of payments if that was to keep up. And if I needed it in case of an emergency, I would probably have to pay a penalty. I believe it's 10% right now. I wouldn't want to do that, but if I took the 10% away from that, I would still have like $11,644 that I could use as an emergency fund to live on if I ran short. I would just have to pay that penalty. And that would just be money that I got off distributions. So hopefully the original principal would stay in there. Or maybe I don't need any of it and it just keeps growing. Or maybe you need half of it or whatever. But it's just like a little bit of my, I wanted to share my thought process in my mind on this. Well, when it comes to retiring early, a lot of things go through my mind. Well, like I stated in the beginning, 2/3 of the money that I have is invested in an IRA, which you can't touch to your 59.5 without penalty. So I'm going to basically be forced to live out of my cash account or my retail account, anything I can get off of that. And like I said, I do get about $69,000 projected worth of distributions on what I have invested, but there is NAV erosion tied to some of that. And so I may adjust the portfolio to eliminate or lower the NAV erosion that I do receive. That's one of the things. And basically, I don't want my account to get diminished. So hopefully that I can keep, like in my IRA, I have approximately, say, $500,000 worth of Vanguard VU. Well, by the rule of 72, and I believe I Googled it one time and it said that in the last 10 years, the S&P 500 has averaged about 12%. Well, if you take the rule of 72 and you take the number 72 and divide it by your APR of, say, 12%, is what I would hope to get, then that money would double in about 6 years. 12 divided by 72 is about 6. So if I could avoid touching that money for 6 years and I left it in there like that, then that money would double. So the account would just continue to keep growing and growing. But you never know how life takes you and everything. But that's the way my thought process is going right now, is I'm trying to get as much premium out of my cash account to live off of. And then I talked about, like, I do have over $1,000 worth of payments right now per month in my IRA. And if an emergency came up, or if I just really needed it, I could take that money out and just pay the penalty of the 10%. So that would be one thing I could do. And then the last thing that really like makes me really think about this is insurance. So I'm not exactly sure how to go about that. I've kind of been looking at some different options, but that is a major factor as well. So basically, I guess it depends how much my bills are and how much I actually really need to live off of. And I just don't want to survive. I want to live. I want to do things. I want to be able to take vacations, etc. So I'm just sharing this with everybody, what my thought processes are. And I may be able to retire early. And eventually, I'm hoping to do it pretty much live on my channel and show everybody, my process and how I'm actually doing it. But this is my thought process in preparation to it right now. And if you have any questions or comments, please drop them below. I'd love to hear what your thoughts are on this. And if you like what you're seeing, please subscribe to the channel. And like I said, none of this is financial advice or a recommendation. This is just what Mike's doing on his journey and his thought process and his opinions. And with that being said, I will catch you all later.